Um, Good evening, candidates. I have started recording now.
Good
Niharika,
evening, sir.
good evening. Niharika, Chittaranjan, Meghamala, Samsung, Alankrit, Kumar, Ankur, Anusri Valsa, Rishika, Verma ji. Welcome. Now, the first question goes to, yeah, 1 minute. Why it is not, why it is not going? I'm not able to move away from this by recovery. I can't, you cannot minimize Zoom. That's right. So I should go into this some problem. But if I show this, you people will see it now. I don't want you to see this. Okay. I don't want you people to see this, but my asking questions from this. To start with, first, let me put a question to you. You are all going for, say, credit officers program. So from that angle in mind, first, let me ask you one question. We will go like this. First is Niharika, today's attendance wise, number one is Niharika. Number two, Chittaranjan. Number three, Meghamala. Number four, Samsung. What is your name, Samsung? Samsung, what is your name? No, number five. Samsung, what is your name? Please speak loudly. I think her internet is not all.
Anjana.
Anjana, acha, acha. Her internet is not all right. Then Alankrit Kumar is number five. Six, Ankur.
Anjana.
No, I know. I took your name. Anjana is number four. Number four is Anjana. Then Rishika. Seven is Rishika. Then eight is Varmaji. Then Kishore. Number nine is Kishore. Number 10 is Sunil. Very good. Number 10 is Sunil. Then we are getting one Sarika. Sarika is 11. We are getting one Sarika. Number is 11. Number is 11. 86197. Yeah. 86197. 86197. Just a minute. From today, the pressure has started. Lot of people are joining and in Zoom class. Lot of people have started joining. So we will see. This we will do like this 1 or 2 days. Thereafter, we will take straight away mock interviews. To start with, first question goes to number one, Niharika. Niharika,
Yes, sir.
can you please answer me? What do you understand by revaluation reserves?
Yes, sir. So these are those reserves which has been whose value has been updated from their earlier value, or and
Hmm,
uh, it is the difference between the fair market value and book value of an asset.
hmm. Revaluation reserves are a part of Tier 2 capital. These reserves arise from a revaluation of assets that are undervalued on the bank's books, typically bank premises and marketable securities. The extent to which the revaluation reserves can be relied upon as a cushion for unexpected losses depends mainly upon the level of certainty that can be placed on estimates of the market values of the relevant assets and the subsequent deterioration in values under difficult market conditions in a forced sale. For example, bank premises might have been bought for 10 lakhs rupees 40 years ago. Now it may be worth 10 crore. But when it is brought for sale, it may not get 10 crore, maybe it will get 5 crore also. So whatever revision that is done on account of undervaluation of the assets is known as a revaluation reserves. Niharika,
Yes, sir.
if you had used some example, it would have been ideal. At least the best thing is bank premises. I do not know much about that marketable security, but that bank premises, if you have used, that would have been a very good example, easily understandable. Next, we are going to Mr. Chittaranjan.
Yes, sir.
Mr. Chitta, please switch off your mics. Those people who are not talking, please switch off your mic. अभी अभी किसका mic खोला है?
Ranjan, sir.
Chittaranjan, Chittaranjan, your
Yes, sir.
mic. Somebody else is talking. Are you sitting inside a common room? थोड़ा request कर लीजिए उन लोग का not to raise voice now. Where are you now, Chittaranjan?
Yes, sir.
Where are you? Are you in house or outside?
Yes, sir. Outside. Very low, sir.
Pardon, किधर?
Library, outside library, sir.
अच्छा, तब तो you are not eligible for this questioning. You need not answer.
Yes, sir.
Can
No,
you
yes, sir.
answer?
I'm eligible. You can ask. Yes, sir. Definitely, sir. Yeah.
Chittaranjan, please
Yes, sir.
tell me what do you understand by a risk-weighted asset?
Sorry, sir.
Risk-weighted asset.
Yes, sir. Sir, it is used to determine the minimum amount of capital of a bank must hold in relation to the risk profile, like of its lending activities and like other assets.
Hmm. Wrong. The
That is called
correct
risk-weighted assets, sir.
no risk-weighted asset. Correct answer आया नहीं है. Risk-weighted asset. The notional amount of asset is multiplied by the risk weight assigned to the asset to arrive at the risk-weighted asset number. Risk weight for different assets vary. Example, 0% for government securities and 20% for AAA rated foreign bank. That is, it depends on the type of securities. The risk weighted asset will differ. For example, nowadays they say if it is a loan against say your own gold reserves, gold ornaments, you have to give a weightage of 0.5. I'm not sure about it. Even in respect of loans given to staff members, you have to provide 0.40 or so. You take the account of all the accounts of bank where everything is in order. Installments are repaid properly, interest is paid properly. Even then, you have to provide the risk weight. Some provision has to be made. Assuming our bank's standard asset is 100 crores, then if it is 0.4%, that much has to be provided. So that is what the answer for the question about a risk-weighted asset. Mr.
Sir,
Chittaranjan, you have to
sir.
study deeply and
Very
understand.
well, sir. Yes, sir. Sir, actually, I shot in Google these 50 assets in simple language. The answer has been came to that is so I can read it in my copy, sir.
But I am reading from the website of Reserve Bank of India.
Yes, sir.
There cannot be a better one than this. But even here, some mistakes can be there. But let us give more weightage for this. Doesn't
Okay,
matter.
sir.
No problem. We will go to next number 3, Megana. What is her name?
Meghamala, sir. Yes, sir.
Megamala. Megamala
Yeah.
is from which state?
Yeah, I'm from AP, sir, Andhra Pradesh.
Andhra Pradesh. Megamala. Good.
Yes, sir. Thank you.
Can you explain what is market risk?
Sir, actually, this is my very first interaction with you, sir.
No problem. So
Uh,
if you are
I
not
didn't.
prepared, no problem. So
Hmm.
yesterday I requested the candidates to prepare on these questions.
Okay.
Actually, these are for which I have shared the link also to you in our newspaper, in our what is that credit officers program. Everywhere I have
Hmm.
been sharing. People are not seeing and reading. That is what the problem is. Okay. So now you can study it afterwards. No problem.
Yeah.
Now we will go to
Okay.
the next person. Number 4, Anjana. Anjana, you are appearing for which interview? Anjana is there or not there? I think she has gone. Her internet is not all right proper. It is not good, probably she has gone. No problem. Then we will go to Alankar. That boy also gone. The moment I said I'm asking questions, all the people are leaving the room. Alankrit. Then Ankur is there. Ankur.
Yes, sir.
Can you are also going for credit officer only?
Yes, sir. PNB credit officer.
PMB credit officer. Can you please tell us what are the market risks that are there in the matter of our lending?
Sir, can you please again say
What do you
hello?
understand? What do you understand by market risk in terms of?
Market risk.
Mm,
Uh, sir, it's a risk associated to losses
mm,
on financial investments,
mm,
uh, and it is a measure the factors that are affecting the performance of financial markets.
mm. Of course, the answer given in our RBI site is not very relevant for our lending. I will just search market risk relating to lending in banks. When we search like this, major risks, banking on interest rates, bank risks and lending outcomes, videos of market risks relating to banks. That there are market risk is given as interest rate risk. I will show you. It is not, the answer given in that is not correct. This one, market risk is interest rate risk, equity risk, currency risk, commodity risk. See, we might have taken some property as security. The valuation of that may change. Then sometimes when we are dealing internationally, this currency risk is also affected. Then equity risk, that is the share capital of the company, the valuation may go up and down, and that may affect the company's ability to repay. Then interest rate risk, suddenly the interest rate may go up, in which case the risk increases. Mr. Ankur, it is okay you did not answer this question properly because the answer given in Reserve Bank website pertains to probably the capital of the bank. So that may not be very relevant. Okay. Now
Okay,
let
sir.
me,
I will go
yeah,
through it again.
yeah.
Sir,
Now,
in the first line, they have said about the changes in the price movements
Acha, that one point,
as per the market.
yeah,
Sir,
that
I
is
think
given.
that is right.
Yeah, here it is given. Market risk
In
is
first line,
defined
they
as
have
the risk
said.
of loss arising from the movements in market prices or rates away from the rates or prices set out in a transaction agreement. Maybe that can be taken as the good example, but then it doesn't speak about the other risks like say credit, I mean interest rate risk and other things. That can also be told. Okay, very good. Now, these are
Okay,
all
sir.
very, very tough questions, but they do ask in some exam in interviews. What do you understand by derivative? Honestly, candidates, I am not much exposed to that. If anyone can, now next person to answer will be Irishika. Ishika is there online.
Yes, sir.
Can you try this? What is derivative? I am
So this is my first class, and
not okay. No problem.
yeah.
Then we have next candidate is Varmaji.
Yes, sir.
Varmaji, can you try this question what about
Yes,
derivative? What is derivative? Where the term
sir.
derivative is, pardon?
Sir, yeah, sir, am I audible to you?
Yeah.
सर डेरिवेटिव आर सर डेरिवेटिव वो होते हैं जिसके अंडरलाइन एसेट से उनकी वैल्यू डिराइव होती है लाइक इन वी कैन नॉट डायरेक्टली ट्रेड इन इंडेक्सेस तो वी हैव टू सर का अंडरलाइन एसेट
Mm,
ट्रेड करते हैं जैसे
mm,
अपन डायरेक्ट गोल्ड में ट्रेड नहीं कर सकते तो फ्यूचर और
mm, yeah. Mm. I think it is not, your voice is not heard. Your voice is not
जो
heard, Varmaji. Why don't you read this, Varmaji? A derivative instrument, a derivative instruments
सर
derives
आई एम
its,
लॉगिन
yeah, please
सर
read.
मोबाइल से लॉगिन किया हूं, सर
Mobile से login हुआ है. Okay, Niharika, please read. Niharika.
Yes, sir. Yes, sir. Derivative instrument derives its value from an underlying asset. They are basically there are
Underline.
basically three derivatives.
Hmm. And underlying product आपने asset बोला था.
Acha, okay. A
Hmm.
derivative instrument derives its value from an underlying product. There are basically three derivatives. First is forward contract. A forward contract is an agreement between two parties to buy or sell an agreed amount of a commodity or financial instrument at an agreed price for delivery on an agreed future date. Future contract, it is a standardized exchange tradable forward contract executed at an exchange. In contrast to futures contract, a forward contract is not transferable or exchange tradable. Its
Hmm.
terms are not standardized and no margin is exchanged. The buyer of the forward contract is said to be long on the contract and the seller is said to be short on the contract.
Hmm.
Options. And second is options. An option is a contract which grants the buyer the right but not the obligation to buy or sell an asset, commodity, currency, or financial instrument at an agreed rate on or before an agreed date. The buyer pays the seller an amount called the premium in exchange for this right. This premium is the price of the option.
Please
Third
read
is
this. It's
swaps, is
no,
an
no. It's
agreement.
no, no. Please read this. It's very interesting. Options. Read once again. An option.
An option is a contract which grants the buyer the right but not the obligation to
Hmm.
buy or sell an asset, commodity, currency, or financial instrument at an agreed rate on or before an agreed date. The buyer pays the seller an amount called the premium in exchange for this right. This premium is the price of the option.
Actually, I was under the impression the term premium will come only in respect of insurance. whereas that premium is there in the case of these options in trade contract also. Please read next one, swaps.
Third is swaps, is an agreement to exchange future cash flow at pre-specified intervals. Typically, one cash flow is based on a variable price and other on a fixed one.
Or on a fixed one. Very good. Thank you. So this is really a tough portion which may be asked for in our what is that Exim Bank interview. This is very likely to be asked. Next, Mr. Kishore is there. Kishore is there or not?
Hello.
Yeah, Kishore. What is your degree, Kishore?
Hello. Am I audible?
Yeah, audible. Kishore, what is your
Sir, actually,
degree?
sir, I am preparing for a PNB credit officer.
PNB credit
Sir,
officer.
I have done PGDM in finance.
Excellent,
Yes, sir.
excellent,
Yes, sir.
excellent. Very good. And now, can you tell me what do you understand by doubtful asset?
Sir, no. Sir, 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 asset which become NPA
Is this
or
is this
which?
your first? Is this your first class?
Yes, sir. Yes, sir. Yes, sir.
Then you please read this doubtful. If you can see on the screen, please read.
Okay, sir.
Are you able to see on the screen? Kishore,
Sir,
not visible.
sir, actually, I have joined through phone.
Oh, then what about Rishika? Can you see this? Or you,
Yeah,
Rishika?
okay, I will read it out. Yeah.
Yeah.
Doubtful assets and assets could be classified as doubtful if it has remained in the substandard category for a period of 12 months. A loan classified as doubtful has all the weakness inherent in asset that were classified as substandard, with the added characteristics that the weaknesses make collections or liquidation in full on the basis of currently known facts, conditions, and value highly questionable and improbable.
Yeah. Doubtful assets, it is first is standard asset where everything is repaid properly, but where something has not been repaid for 30 days, they say SMA 0, 31 to 60 SMA 1, 61 to 90 SMA 2. After 90 days, once it has not been repaid, either the installment or the interest, the account will be classified as substandard. Then after one year from the original due date of the installment, if it is not paid, it will be classified as doubtful and doubtful 1. After 2 years, it will be doubtful 2, like that. Then now after 3 years, it will become a loss assets. Now I wanted somebody to look into what is the provision chart. Did anybody come across that provision chart? Did you see that or not?
Yes, sir. I have written it.
Acha, very good. Please tell me, I'm happy. Tell me, for substandard when I say secured को कितना provision करना है and unsecured को
For
कितना.
secured loan is 15% and for unsecured loan is 25%.
Thank you. Then doubtful 1, what is the other classification? Other
For
provision.
doubtful one, that is for up to 24 months. For secured loan is 25% and unsecured loan is 100%. For doubtful 2, that is up to 48 months. For secured is 40% and unsecured is 100%. And for doubtful 3, that is above 48 months, is for secured and unsecured both is 100%.
Is it given as 48 or 36?
48, sir, up to 48 months. And for doubtful 3, above 48 months.
कितना 100.
100.
Very good. All of you candidates, please write down. Niharika, please put this as a detailed document in our WhatsApp group today or tomorrow. Okay, like yesterday you did that one,
Okay, sir.
very nicely regarding the total deposits, advances, and all. You put it rightly. So please put it like that. Thank you. Thanks, Ankur. Ankur, thank you so much. Very happy.
Yes, sir. No problem, sir.
Very, very happy. Now, after Kishore, we will go to Sunil. Sunil is available here,
Yes,
please.
y-
Mr.
yes, sir,
Sunil,
sir.
you are appearing for PNB or which one?
PNB, sir. Today is my first class.
Acha, today only you have joined. Acha.
Yes,
It's
sir.
okay. It's okay, Mr. Sunil. Why don't you read? Can you read your, or you are on mobile? You cannot read. Kaise
I can read, sir. I can read.
Very good. Then I request you to read mm, this one: substandard assets, then doubtful assets, then loss assets, off sheet exposure. ये सबको पढ़ लीजिए आप. Substandard assets. Please read.
S- Substandard asset, sir. A substandard asset would be one which has remained NPA for period less than or equal to 12 months. Such an asset will have well-defined credit weakness that jeopardize the liquidation of the debt and are characterized by the distinct possibility that the banks will sustain some loss if deficiency are not corrected.
Doubtful asset.
Doubtful asset. An asset would be classified as doubtful if it has remained in substandard category for a period of more than 12 months. A loan classified as doubtful has all the weaknesses inherent in assets that were classified as substandard, with the added characteristic that the weaknesses make collection or liquidation in full on the basis of currently known facts, conditions, and values highly questionable and improbable.
Doubtful asset.
Loss assets, sir?
Loss
Doubtful.
assets.
Yes.
Doubtful.
Lo-
Somebody said, yeah. Loss assets.
yes. A loss asset is one where loss has been identified by the bank or internal or external auditors or the RBI inspection, but the amount has not been written off wholly. In other words, such as asset is considered uncollectible and of such little value that its continuance as a bankable asset is not warranted through there may be some salvage or recovery value.
Although there may be some salvage or recovery value. Loss asset. Please read once again loss asset. What is a loss
A
asset?
a loss asset is one where loss has been identified the bank or internal or external audits or the RBI inspection, but the amount has not been written off wholly. In other words, such an asset is considered uncollectible of such little value that is continuance as a bankable asset is not warranted, although there may be some salvage or recovery value.
Good. Continue. Next one. Off balance sheet.
Of Yes. Off-balance sheet exposure refers to the business activities of a bank that generally do not involve booking assets and taking deposits. Off-balance sheet activities normally generate fees but produce liabilities or assets that are deferred or contingent and thus do not appear on the institution balance sheet until and unless they become actual assets or liabilities.
A. Off balance sheet exposure. Incidentally, candidates, I came across one new question known as flexi deposit. I don't know whether you have heard about it. So this concept, new one, I came across that because they asked in one IDBI bank interview. IDBI bank assistant manager interview, they have asked what is a flexi deposit. So accordingly, I have posted a video on that. You can see that also. Otherwise, we will see here what is flexi deposit. India flexi deposit. Yeah. Now, who was reading it last? Mr. Sunil.
Sunil, sir.
Sunil, please read this
Yes,
one
sir.
on the screen. Flexi deposit. Yeah, flexi fixed deposit. Please read.
Sir, it's not
It's not
visible,
visible.
sir. I can't.
Not visible. I'm
Yes,
sorry. Good. A flexi fixed deposit.
yes. A flexi fixed deposit is a special kind of deposit offered by Indian banks and in other countries as well. It is formed by combining a demand deposit and a fixed deposit. The depositor opting for a flexi FD is able to avail of both the liquidity of savings and current accounts and the high returns of fixed deposits.
Sure. So if at least if you tell this is sufficient. But
Okay.
if whenever you get time, you can go through these features of flexi deposit and all. There is no need why they should ask this, but first time I'm hearing in bank interviews this question being asked. That is why I thought I should share with you. Very good. Now, next one is yeah, I think this one is worth reading, going through reading. After Sunil is Sarika. Your internet is okay. Can you read? Sarika? Sarika is there or not there? Sarika has gone. Maybe internet is not all right. Very good. Anusri Valasaraj, your internet will be always bad. Kerala
Yes, sir.
Acha, today it is all right. I am happy. Anusri,
Yes, sir.
yeah. Current exposure method. Please read this. The credit equivalent.
So I'm not able to see the slide.
Niharika, can you read it now? Niharika. Candidates, if
Hello.
possible, I request you to come on laptop so that you can read. Yeah, please read, Niharika. Current
So,
exposure method.
with sir, it is not visible on the screen.
Oh, oh.
So it is showing flexi fixed deposit only.
Acha, acha, that is the mistake. Yeah, current exposure method.
The the credit equivalent amount of a market related off balance sheet transaction is calculated using the current exposure method by adding the current credit exposure to the potential future credit exposure of these contracts. Current credit exposure is defined as the sum of the positive mark to market value of a contract. The current exposure method requires periodical calculation of the current credit exposure by marking the contracts to market, thus capturing the current credit exposure. Potential future credit exposure is determined by multiplying the notional principal amount of each of these contracts, irrespective of whether the contract has a zero, positive, or negative mark to market value, by the relevant add on factor prescribed by RBI according to the nature and residual maturity of the instrument.
Very good. 1 minute.